Welcome back, everybody, to the Investors Roundtable. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K Kraft, BOBBYKKRAFT. And we're back. This is the first episode that we've done in, I think, almost 6 weeks, something like that. And the dust has finally settled on the virtual event. So I've been able to finally come up for air and catch up with a couple friends here. So I'm really excited to welcome the mainstays of the show. I think we can be accurate in saying that they're mainstays at this point. We got Stephen Kiel from Arquitos Capital and Gary Ribe, co-host of In the Market Trenches podcast. What up, guys? How you doing?
How you doing, Bobby? Good to see you again. Laser eyes.
Yeah, right. Yeah, I actually forgot that was going to be my doppelganger for this episode. But I said in the email about inviting everybody for this week's event, I said anything but BTC and Musk, but I have a feeling the Musk from the last 6 weeks
These things are merging.
It's
Musk
just
and BTC, Musk and crypto are becoming one.
I mean, it's just. Listen, I know we said we weren't probably going to talk about that, but I'm sure inevitably we probably will. But let's start off with what you guys have been up to. What's been going on? I feel like it's been a crazy yet not crazy 6 weeks, like a busy yet not busy time. Like what have you guys been up to, Gary?
Yeah, well, it's exciting because look, we're getting in the annual meeting, shareholder meeting season, and things like that. And so for our small public company that I'm the chair of, we've got that coming up next week. Now we're into a second year of virtual meetings here, which is interesting, especially for some of the smaller companies that I think all of us follow. It's both a blessing and a curse with these virtual meetings. Sometimes in past years, showing up in person, you gain some kind of insight about the company itself, but you also have a way to network and catch up with some of those fellow investors in those small meetings. And that's what we're not getting the last couple of years here with the virtual meetings. So I'm hoping this will be the last season of that. And next year we can get back to normal times. And I think we will, people are getting vaccinated and things are opening up a little bit. So hopefully next year we can do that. We can all be at Berkshire in person. Hopefully, Warren and Charlie will be there. And, so one more year, I guess.
Yeah, I keep worrying that this year will be the last for that. That's an increasing worry with every year. Actuarially speaking, it's inevitable. So I'm going to make a special effort to go out for next year. Assuming that they have it, just because it's like, it could be the last one. And so
they might be behind a plexiglass like thing or something like that.
Yeah. Well, I'll tell you, the world is definitely opening up, and I can speak from experience having gone to Vegas like 10 days after the virtual.
Yeah.
I've never seen it that crazy ever. Like we went, it was for a buddy's bachelor party, and like we decided to go downtown because we want to go to the cheaper tables because we're microcap investors, of course. But
you were the old Vegas guy with the neon sign with the boot and the hat and the whole thing.
Of course, are you kidding? I love it down there, man. That's my favorite. Well, Circus is technically my favorite. That's not like downtown, but like I do like going downtown. But it was more busy than I'd ever seen it. Ever. I mean, if you weren't, like, I'm vaccinated, so I was like, all right, I'm feeling okay. But like, if I wasn't vaccinated walking around, I would have been having a panic attack the entire time, because it's just like, it's back to the, all right, where are we going to next? What hotel are we going to next?
Yeah.
Where are we going to, where's the cheap tables? Of course, there's no cheap tables anymore because everyone's, back at it.
It's crazy though, that the anxiety that you feel a little bit being around, people so close. You didn't really feel a couple of years ago. And, I'm in New York here, and people downtown, it's definitely picking up again, and maybe even busier than it was before. And, half people are wearing masks now and half not. And this is a recent thing. And people standing a little too close to you and you feel a little more uncomfortable than you used to feel with that. So I don't, my big question though is, when we get back to normal travel, normal meetings, in-person meetings, do we ever have to wear a tie again?
I hope not.
Cycle, man. I don't know. I kind of like, I looked at the suit in the closet and I was like, you know what? It'd be nice just to kind of clean up and look good, wear a suit, and like.
We can wear the suit with an open collar. Why the tie?
I forgot.
A nice tie, a nice bow tie. Depending, like, you could say something about yourself. It's the tie is the only thing about the suit where you can really say something about your identity, right? Like the rest of it's pretty more or less uniform, right? So
I mean, Gary, do you remember how to do a Windsor? I forgot at this point.
I never really knew how to do one all that well. I can, however, tie a bow tie myself. So I've got that going for me.
You're a bow tie guy, huh?
So you mentioned meetings. I went to a meeting when you guys recorded for the conference. I was at a meeting, and there were 20-something people at the meeting, and it sort of dawned on me that like nobody really knows how to interact anymore because everybody is so comfortable with something completely different. And so like some people were waving, some people were fist bumping, some people bump elbows, some people just kind of nod. It's just like for a guy that's always been kind of socially awkward, it was like, you know, I felt like I figured out what to do, and now I'm completely lost. But it's maybe a little bit better because everyone else is also. So what do you guys? I've been sort of mulling this over, and I think that there are some things that are like permanent in nature about what's happened the last 15 months, and some things are less permanent in nature. And I've been trying to sort of ruminate on what's changed for good and what's just changed for right now. And I don't know if you guys have any.
I think we're going to get back to normal meetings, you know, fundraising and things like that. I don't know about so much of the conferences. I mean, I think people want to get back to the conferences, and there's the networking there, the social aspect, and that's what human nature is all about. That might take a little bit longer, and some of these virtual meetings might continue indefinitely. But in terms of fundraising meetings and sales meetings and things like that, everyone I've talked to is itching to get back. And I know I am too. You know, I used to travel to London and Switzerland for meetings, and it's been a couple of years. I miss it. I really do. It's been a year and a half. So I want to get back to that. I think other people want to get back to that as well. And you know, now though, it allows for some follow-up in between with video Zooms and things like that, which I think is helpful. So we can have a meeting in person, and then if there's any questions or follow-up, you know, we can hop on a video call a week or two later and resolve that. So I think that's both, you know, to your question, it's both getting back to the normal, but then enhancing it. And I hope that's the case in all areas. I mean, even like here with restaurants in the big cities that have taken over kind of outdoor seating that they may not have had as much before. Now you have indoor seating and outdoor seating. So, and the great restaurants survived and thrived. You know, I think we can go across that all these different industries, companies that have taken on the challenge and enhanced the offering. Things are going to be better in the future than they were in the past because they've had what they had in the past plus more. So you know, I think that's the way we kind of have to look at things.
Yeah, I had a similar take. Sorry, I didn't mean to interrupt you, but just to answer your question, I had a similar take, especially on speaking specifically to restaurants and conferences. I'll start off with the restaurants part. Is I completely agree with everything you said. Like just this past weekend, we went out to dinner on Main Street in Santa Monica, and things in LA are starting to open up quite a bit. June 15th, I think, is the Great Unmasking. I dubbed it that, the Great Unmasking. But on Main Street, you see, and this is in other little streets throughout LA too, is that, you know, you have all the outdoor seating. And I distinctly remember my wife even saying, she was like, they need to keep this. Like, this is actually not just like for their businesses, but this is really cool. Like, it's just, it feels like more alive than it ever has, you know? So I think in the restaurant industry, like there is that great silver lining here where, I don't know, hopefully the city doesn't become assholes and like takes permits away from being able to like continue to do that. But I think just on the restaurant side, that's really cool. On the conference side, as a conference organizer, I have an interesting take on this, I think, but my take is like, everyone's going to be excited to go to like the first few and then remember like, damn, that was expensive, and and then realize like, all right, well, it was way cheaper with doing the virtuals and I got a lot more out of it. So that's, I mean, we've never said we were going to ever do more than one in-person event anyway, even pre-pandemic. And so like we're doing Vegas next year in early May in 2022. We announced that, but even with things opening up, like there's never been a plan of doing another in-person because.
Well, one of the things that's interesting about the conference, which I think is a negative for the virtual ones, is, you know, so I've participated in a number of virtual ones here this past year, And what I find myself doing is I'll have one-on-ones, or I'll watch the presentations to the companies that are already on my watch list, or companies I already own that I've pre-selected. When I would show up in person, I would just, you're there throughout the day. I just stick my head into random meetings.
Right.
And sometimes those meetings would turn out to be interesting. And I would not have otherwise chosen to go into them, other than I had an hour to kill. And I think that's, as an investor, you're losing that. You're losing a little of that serendipity, or just chatting with people, other attendees, about things that they own, and that interaction. So I think the in-person meetings actually provide more value to an investor.
Right.
But to your point, I might not go to as many of them because of whether it's the cost, or whether it's like, hey, do I have to do this for a couple of days if I can just hop on a virtual one? And it's probably to my detriment, and I know that in advance, but you are missing out on some of that in-person value.
Yeah. And agree with that.
I kind of suck at actually attending virtual events, because I'll put it on my calendar and then I get lost in everything else that's going on that day, because I didn't actually dedicate a block of time being, going there, and the travel and the this and that. It's sort of like, okay, well, I guess this is on the calendar, but so-and-so just reported their earnings today, so let me go through their 10Q instead. And, so it doesn't really happen. But like the in-person stuff, it's like, I don't know, like I feel like I'm on the low end of the amount of social interaction that I need, but I'm surprised at how much I miss it. Like I would describe myself as a quasi-angry loner, but I still need I hate people, but I love gatherings. It's weird, It's and so, but it's not all the stuff that that you need to be looking for or looking at. It's all the stuff that you don't know that you then find, and it's sort of, I was talking to my business partners about this, and it's not the stuff that we know we need to accomplish that gets affected by not being able to get together in person. It's having lunch and discussing something and having an idea, because you're able to, and like you can schedule time for stuff, but like, I don't know, if somebody calls me right now, they're going to interrupt what I'm doing. It's different than being there in person. And it's sort of like, it's all the stuff that doesn't happen. And I do feel like it's sort of influenced my investing a little bit, because I do like to sort of talk things through and ruminate on ideas, and like, hey, what do you think about this? What do you think about that? And my partner Eric's really good at this. It's like, I can like, you can sort of like, if I can sell him on the idea, it's probably a good idea. And if I can't sell him on the idea, it's probably not a good idea. And that's just much harder to do over the phone. It's like, hey, what do you think about this? It's like, I'm going to be 40 soon. Is my midlife crisis going to involve a Harley? And aren't there a lot of people like me? And a lot of stocks are expensive, but like, is that interesting? I don't know. I mean, it's like, it's these types of things that don't happen. And but it's just been such a strange time.
Gary, to that specific point, if we want to, we would have this conversation in person. I'm 42. Never thought about riding a bike before. And I actually, the last couple of months, I've been thinking about it. It's like, it'd be nice to kind of go off and drive a Harley, or ride a Harley, and, just get some alone time on the road with me. And I never thought about that before. So I think there is something about the midlife area there, but hopefully I'm not midlife. I mean, I think I might be able to make it to 100. So I'm at the 40% mark, 42%. We're going to round.
I mean, sometime over the next 10, 15 years, you're going to be recycling children's blood through your veins, and you'll just be like,
absolutely.
It'll be right next to the Bill Gates microchip.
Well, Gary, you bring up a good point. I mean, like, it's definitely, we definitely take for granted the phone conversation, or even the Zoom conversation, versus being in person, and the idea of having somebody's, at least the appearance of their undivided attention, right? Yeah. Over the phone, and even with Zoom, sometimes, like, you guys will see my eyes, I might pull up an email or something, like, like,
wait, what?
What? Not with you. Oh, sorry. Not with you guys, of course, but over the phone, it's, you don't know 100% that you have their undivided attention. It's
but you just don't.
You have that in person.
Yeah, I mean, that's it. Even on Zoom, and and these are more for like one-on-ones and things like that. That look, you're checking how's what the stock's doing today, or you're checking something comes into the room, the dog barks, etc. I mean, it's distracting. Where when you're in person, video is good because we can still see each other. You can still kind of get a little bit the mannerisms, but in person, there's so much nonverbal communication there that you can see on both sides. And whether it's fundraising or whether it's you're talking to the management of a company, you can tell much better if their words match up to the reality based on their nonverbal communication. And
yeah, body language is key.
Valuable. What's that?
So the body language is key, right?
Absolutely. Absolutely. It's more important than the words themselves. And to be able to even visit companies again, and walk through, see what their offices look like, see what cars the senior management drives, see what the other employees, what their attitudes are like. That's valuable information as an investor when you're doing research and due diligence.
Stephen, you do a lot of site visits, or is that something that's common as part of your practice? Like I tend not to invest. I mean, maybe I find them like I'm not doing sort of industrial type stuff where people are making stuff. So is it as valuable, or do you do them? Or?
It depends. I think it totally depends. And some people, some investors, PMs, analysts take pride in the number of visits they have. I mean, pre-pandemic, number of visits they have every year. And other ones would take pride in never having a meeting because, you don't want to get sold or distracted or something. The senior management generally are really good salespeople. Look, I'm not a purist either way. It depends on the company and it depends on the level of due diligence that you think is required. And some of that due diligence is required simply to form the discipline and commitment to the position. This is actually, I'm going to deviate just for 1 second about crypto. I don't want to get into a deep conversation about this, but the problem that I have with crypto, forget about the foundational issues about it, is how do you get a commitment and discipline level, right? So if you're a diehard person, you're just going to own it forever and you're going to always buy the dips and things like that, fine. You have an irrational amount of commitment to it. Fine. That's like a personality disorder. That's not like a research thing, right? And it's the same people who have owned Berkshire for 50 years. God bless you. You just decided to own it forever and you fine. But for the rest of us, how do you get that commitment and discipline? When we're talking about companies and fundamental analysis, that commitment and discipline comes from the research process. You've made some sort of determination. You've decided that I like this company at this price and et cetera, et cetera. And it takes time to build that commitment. So if the stock happens to drop by 50%, but the operations still seem to be fine, then you can continue to own it, or maybe you buy more. And how do you do that with gold? How do you do that with crypto? How do you do that with, trading currencies? It's mostly charts and mostly, you're reacting to the prices itself and some sort of 30-year thesis that may or may not be right. But, for us as people who like to invest in companies that you can value, have fundamental bottom-up analysis, our commitment level to owning it in difficult times or buying more in difficult times comes from that research process. And that's completely different than than a crypto investor who has nothing else to rely on other than price and some kind of irrational foundational view on on things that may or may not come true.
Yeah.
I mean,
I would say that I largely agree with that. I think what I'm always cognizant of is there's enough due diligence to get how much do you got to know to do something? What's your confidence interval on a decision? And I know people who need a confidence interval of 95% or higher. That's not me. I'm a little bit lower. There have been instances where I've had very high confidence, but it's sort of with things like the Bitcoin and everything else like that, where it's sort of it's valuable because other people say it's valuable. Okay, what's my confidence interval that people are going to continue to say that it's valuable? It's hard, Yeah,
and I'm not saying don't invest in it, right? That's up to you, but realize what it is. Understand what it is. And be prepared for there to be large drops and perhaps one day for it to be zero. People forget the Beanie Babies that that my mom invested in and your sisters did and things like that, and there's examples like that every 10 years, right? Every 10, 15 years. But, I think back to the question about how much research and how you do the research, whether it needs to be in person and it's kind of scuttlebutt you do, you have to be a little bit worried about over research also, because your commitment level needs to be appropriate, not too much. Because if you feel like you've put in all of this time, maybe hundreds, sometimes thousands of hours on a company through the years, that blinds you also. This is where the psychological element comes in that's so fascinating about investing, is you can screw yourself up by doing too much research as well, because then you have this bias, of all this time you've already put in, that you think that time is valuable in some way, and then you miss red flags that you otherwise would not have missed. So it's this definitely intersection between information gathering and judgment from that versus these biases that always come into effect.
Yeah, it's weird. It's evolved for me over time. So it used to be that I used to have to do a lot of work to get comfortable with something to do it. And now it's sort of, for me personally, I feel like I know within the first half hour of looking at something, oftentimes, whether or not it makes sense to me, it's something that I think will be all right. And if I'm devoting a lot more time to it, it's like I'm trying to convince myself that it's a good idea rather than it actually being a good idea. And so it's like my stance on this has sort of evolved over time from being a higher confidence interval, spend a lot of time on something, to I'll know within the first hour or two whether or not I'm going to do something, and then it's just trying to think about things like sizing it and what am I going to be, and figuring out what I don't know, and just sort of what don't I know that I need to know about this. And there's a lot of times there's only a handful of things that really matter, and as long as you got a good beat on those 2 or 3 things that really matter, if it's more than 2 or 3 things that matter, it's probably too hard. But it's interesting that it's kind of like in the beginning you have this false sense of confidence, and then as you sort of go on and you learn more, your confidence sort of diminishes, and then you sort of have to build it back. So I remember like 5 or 6 years ago, it sort of dawned on me that like you have this imposter syndrome where you're like, I don't really know what I'm doing, do I? But then like you look at what's going on, you're like, no, I actually think I kind of do know what I'm doing, and you have to sort of learn to trust yourself again. The investment journey is funny that way, because you start off and maybe the worst thing you could do is have a good win with the first thing you do. It's probably better to have some lost lessons first, and you sort of knock your confidence. It's an exercise in just knocking your confidence, and then as you build your skill set, you sort of have to your skill set will outpace your confidence pretty quickly. And it's just, I think there's actually a term in psychology for it. Is it Dunning-Kruger effect? Is that what it is? I don't know if they've empirically been able to replicate what it is, but that's what I think what it's known as. And like, it's, I don't know. I've learned to operate basically like at a 70% confidence interval, and just recognize that like when you make a decision, it's a two-way door. It's more so than anything.
That's the dichotomy. You really need to be a great investor. You have to have extreme confidence and also extreme humility, and to be able to know when to apply those things. Because ultimately, when you're buying a stock at a particular price, you're saying all of these thousands of people, tens of thousands, sometimes millions of people, their judgment is wrong on the stock, on the price right now. My judgment is right. And so you have to have that extreme level of, you have to have an ego, right, to make that decision. But at the same time, you have to have that extreme humility to say, most of the time, all these people are actually right. And so I have to differentiate between when they're right and when they're not.
Yeah, my null hypothesis, my do anything, is that the market's got it right. And I sort of, have to disprove that one way or another. And then I have to answer the question, well, if the market has it wrong, what's going to make it go up? And that could be all kinds of different things. But to get back to the issue, like to get back to sort of like visiting these companies, like sometimes I get involved in things and I just kind of want to go see it. I want to meet these people for some reason. Mm-hmm. Like right now I'm involved in this junior gold mining company. It was sort of a spin out of a bigger entity, and the way it happened, the way the whole thing went down was super weird. I do a lot of like special situation investing. I've never seen a fact pattern like this where, you've got, first of all, it's a spinoff coming from a gold miner, and they're spinning out something even smaller. They're going to OTC, not the NYSE, even though they can justify doing it. And they invested all this money in getting this mine up and running just to spin it out, and then the entire management team lined up on one side of the boat after moving it to OTC. I'm just looking at this and this took me all of 10 minutes to know that I wanted to be involved in it.
Yeah.
And then as I'm involved in it, I'm listening to the call. I'm like, I can't tell, and I'm not naming the company because because as I listen to their calls, I get on their calls and ask them questions. I can't tell if they seem kind of dumb to me, and they're gold mining guys, and they just seem kind of the conference call that they host is just bananas, and there's no other way to really describe it. And I kind of want to just go and see these people, like there's a traveling space zoo, and I can go visit visit the animals. That's what I've got going on in my mind. And I kind of just want to see the operation, but it's in the middle of Nevada, and it's kind of it's 5 hours from Vegas. What's that?
Get your bolo tie.
Yeah, get my bolo tie going. But it's funny like that. It's just all it took was about an hour for me to figure out that I wanted to be involved in this thing. But now it's sort of do I want to take a trip to Nevada to go see these guys in their natural habitat and see what's going on there? I never imagined being involved in a junior gold miner, but I'm involved in a junior gold miner, and I kind of and I think it might be the only time I'm ever going to be involved in a junior gold miner, unless there's another crazy situation like this that somebody concocts. And it's I kind of wanted to go see it, but I don't know. It's just
a conference call doesn't do it justice for sure, and even a Zoom call that won't do it justice. I mean, it's and that's why the travel is going to come back. That's why business travel is going to come back.
Yeah. Oh, sorry, Gary, you're gonna say.
So I don't know about you, Stevens, but it was sort of for my day job, we sort of invest more in larger liquid stuff, and that's never been harder. I think I look at the opportunity set, and it's hard. Things are just. But as I go down the cap spectrum all the way to small and micro land, I've got more ideas than money these days. I don't know about you. Are you finding the same thing?
Yeah, I've been in more of this kind of shorter term event-driven stuff for new positions. Mm-hmm. I've been some M&A stuff and in some kind of company-specific things that are a little bit different than in the past. Let me bring up now. I was always interested in this. I was what percentage of the portfolio, and I haven't made my mind up, I guess, about the market as a whole. There's so many uncertainties there. And so I'm kind of looking for more of this company specific things right now. Two things kind of caught my eye though, and maybe this is a way to throw on a few ticker symbols to this discussion. First of all, the Discovery merger here with Warner Media, that's going to be interesting.
Very interesting.
So I'd like to table that for a second here and have it. I don't have anything beyond with what I'm about to say with Nikola, right? So I saw something yesterday with Nikola that caught my eye, and I don't, it's still kind of beginning stages to decide what to do with this. But when we talk about kind of crazy, so the Nikola recent proxy, their new management has decided to take on $1, all the senior management, $1 in salary. And then they get stock issuances beginning at $25 per share. Stock's at 12 right now, right? And so if it gets back to, I think the story was, if it gets back to, I don't know, $60 or something like that, then the CEO gets $2.2 billion, right? But they get nothing until it gets to 25. Now they have some stock otherwise that they had pre this, but you have 3 years where each of them are making $1 per share, and at $25 per share, they start to make money in stock, and stock's at 12. Okay, so stock went down from a high of 90 something to 12 right now. Interesting, right? I mean, no way to value this company. But it's not just the CEO, it's the CEO, the chairman, senior management and things like that. Those are the kind of incentives, crazy incentives. Yes, crazy.
Yeah.
But, something to ride along with potentially. So that's on the list to look into a little bit, and I might have a tiny position. I don't have a position right now in that. But then the second thing is, this Discovery merger, having Zaslav in charge of both companies with the capital allocation skills of both him and Malone, and unwinding the AT&T previous acquisition from a few years ago, putting it into the hands of people who know what they're doing here have shown it. It's going to be in a worldwide reach. It's something that's going to be interesting for sure.
It's going to have some leverage on it too, right?
Always good leverage on it. Yep.
Yeah. I don't have a position on any of the names that you discussed just there, but I thought the deal was it was interesting. I've been of the long opinion that I always thought that AT&T needed to cut the dividend, and that's what they effectively wound up doing with this deal, didn't they?
Yeah. So, but the interesting, so I used to own Discovery, and unfortunately, I sold it out before the spike earlier this year. I even had some options and things like that. So a lot of
what was weird, wasn't that just one of the share classes that did that?
Yeah, so that was because of the what's it called, Arquitos, however you pronounce it.
Well, you think it was Arquitos? Because
yeah, 100%.
That looked like, I'm sure it was, but when I looked at what was going on with that, now I know that there are a lot of people who do share class ARB, right? Voting, non-voting.
Yeah, it was a spike from the one because of it was kind of what happened with Volkswagen a few years ago, 5 years ago, 6 years ago now, where you basically had a short squeeze on one share class. And so the interesting thing with this deal is all share classes are going to be treated the same. And so there's still an ARB you can do right now with the share class. Unfortunately, there's not a lot of liquidity, in some of the super voting. So you can't do it to scale, but opportunity for a retail investor, I suppose.
That's interesting.
Nice. I mean, so you guys brought up a lot of different things and different rabbit holes we can go down right now, but it sounds like I wanted to go down to what Gary was saying, because I mean, look, our audience is more skewed microcap, so I thought this idea of too many ideas and not enough cash to deploy. I mean, what would you guys say are some of the reasons for why, or well, I'll start with Gary here, but Gary, why would you say that there are so many more ideas out there right now versus maybe not that long ago?
Well, I think there were ideas all the last year. It's just, I think that the opportunity set has evolved. I mean, the easy, in my opinion, it was much easier to invest a year ago than it is today, even though there was a lot more uncertainty. So, because a year ago, or a little over a year ago, all you needed was some courage and basically some conviction that whatever you were buying was going to be able to sort of cross the chasm in terms of like liquidity and everything else. And that's really all that was required. Like you needed to just courage and confidence in whatever it was you were going to buy. You fast forward to today, anything that was going to be able to cross the enterprise values today are just significantly higher than they were even pre-COVID for a lot of things. So, but as you sort of go down the cap spectrum, there's still fertile ground for ideas, and there are different kinds of ideas. I mean, Stephen mentioned some event-driven stuff. I'm involved in some event stuff too. Sort of the reorg space has had a lot of interesting stuff going on. I'm involved in one right now where they're reorging in Canada, and I got to learn what a Chapter 15 was in the U.S., which is basically where they just respect the Canadian law, right? I'm involved in another one where there was asbestos liabilities that were transferred, and there was a bidding war process that broke out. Like, just really interesting stuff. There was the spin that I mentioned of the gold company. As I sort of go down the list, it's like there's just stuff happening, and it's all different. It's all idiosyncratic. None of it is really tied to what happens in none of it is really at all tied to what the Fed says or what the stock market does as a whole. It's all just this idiosyncratic stuff that has its own sort of timeline and series of catalysts that sort of just I hope will drive re-ratings and everything else that go with it. And you know, you look at something and like, I don't have a position in Hertz, but like, you know, the Robinhood crowd that got a hold of that a year ago. I mean, I look at it now, it's above where it was when they were involved, and I call it a miracle. And you know, it's just sort of like, you know, I took my partner Eric the other day, a week and a half ago, and I was just like, hey, you know, we should be looking at Hertz here because there's competing plans being involved, and like, you know, you blink and you miss it. All of a sudden, it's, you know, a lot higher, and you know, it's just stuff like that. There's just lots of stuff to do. I'm involved in a reorg now where, you know, they proposed a plan and they pulled the plan, and you know, there's baby bonds that trade, and the baby bonds I think are going to get a better deal than it was proposed in the original plan. And so like, you know, there's all of this interesting stuff out there. And Steven's nodding along like maybe he's involved in some of the same things. I don't know. I was not lucky enough to follow him into his Namtai properties. So.
I was just looking at the price to that. It's up to 23.5. I got out at 14. I got out because, and you know, I had options and things like that too, and personally, and I got out of it because they postponed the meeting, and they were involved in the Greensill scandal and all that. They're going to lose money from that, it looks like. And yet, here we go. We're up to 23 something. And yeah, we made some good money on it, but geez, we'd have 100% plus year so far in the fund if I wouldn't have got out at 14. Or it just shows how crazy the market is. You know, it's at 23 now.
It feels like things are just moving really fast at times, right? It's you know, it's sort of, earnings season was a rough go for me this quarter, at least in terms of some of the larger liquid stuff. It's just been, you know, it was like nobody could say anything that anybody liked. And you know, and then you have the smaller stuff, which is just completely idiosyncratic that way. And you know, it's just it's been a strange, call it like 2 months, because you know, we had the year-end results, and then sort of Q1 creeps up on you pretty fast, and you kind of forget how fast Q1 can creep up on you because the year-end always takes longer to compile, so that time is compressed. And so I kind of feel like I need a vacation.
Yeah, you know, my issue here, I totally agree with you, Gary, and it's the challenge is things are moving so quickly that when something catches your eye, you've got to get on it now in terms of your research and deciding what you're going to do. And you know, the market is crazy. It's crazy right now. I think crazier than usual because of the volatility, the retail crowd, especially some of these smaller companies. And the challenge that I'm having is opportunity costs. You know, some of these, I've got a long watch list here with a lot of really interesting things. And sometimes it gets away from you so fast. And, you know, it's like, okay, do we get in this company because we think it can do 15%, you know, per year over the next few years, and all of a sudden it doubles, and you're like, okay, I'm out. You know, didn't get the chance to actually get into it. And, you know, we're looking at, even in the event-driven space, is, you know, looking at things that are, okay, we think we can make a 15% return on this, but how soon? And then this one, we think we can make a 50%, but how soon? And, you know, you're comparing about these really optimistic, rosy projections, and it's which one do you choose? You know, because which one is going to catch the eye? Which one has the better story? Which one is going to catch the eye of the retail crowd sooner? And that's a new challenge for me, at least. The buy and hold stuff.
You got to get your timeline right?
Yep. You not only do you have to get the fundamentals right, but you have to judge the story and how it's going to resonate with the crowd. Not only with how the fundamentals are and whether they'll keep up or not. And that's it's interesting though. And that's what makes it makes the market so interesting. It's something I haven't had to deal with in 20 years.
Yeah, a few years ago, I learned to ask myself like a question before I got involved in anything. And it sort of helped me as I've gone, which is, you know, are things getting better here? Are they getting worse? Or are they staying the same? And can I tell? And I very much prefer only to be in places where things are clearly getting better, because that tends to be how people find it.
Yeah.
You know, and your timeline thing is very, it's timely for me to be thinking about too, because like, you know, I'm involved in one where, you know, okay, you know, there's cash and stuff, there's cash and securities on the books that are roughly twice what the market cap is right now. But it's like, you know, it's messy. There's stuff going on. It's like, how long you never quite get there with those types of things. It's like, what's my opportunity cost? and sort of waiting and both in time and in brain damage, just waiting around on this, and sort of, you find yourself wondering, okay, can I go find something else where there's more of a natural progression of things where, basically the catalyst is, they came out of a process and the numbers are going to get better in the future, and they just have to post the numbers. Like, that's the best catalyst, right? Like, because they put the numbers out, people find it, and, it's numbers improve, stock goes up. It's kind of like physics. Numbers are worse, stock, and it's physics. So I've been sort of ruminating on that, but there's been just no shortage of things to be poking around at and looking at, and you do find a lot of things that sort of have gotten sort of forgotten along the way, and you sort of, what's interesting is like the knowledge, I don't know if you're finding this, Stephen, but the knowledge about these things is sort of like cumulative in nature. So like, I'm revisiting something that I looked at, I was last involved in 7 years ago, and they had a couple prefs that were out there that were not current, and they brought a new guy in and he wound up taking care of him. He did a good job. And, and now like there's only common, and, it's in the hospitality industry, and, they need to recapitalize something, but like they previously tried to sell the company and then COVID happened. And it's like, wow, here's a hospitality play that hasn't recovered yet, but probably will recover. And they've already tried to sell the company. They already had an agreement to sell the company, and then COVID happened. They had a price. It's just like, this stuff is like, there's just so much more stuff to do than there is sort of time in the day.
Yeah, totally agree.
So,
do you guys feel bad for some investors out there that just don't have that filter yet? Because even just covering the news, sometimes when I'm putting the roundtables together, just coming up with the topic, I'm like, there's so much, and yet I'm at a loss of like, all right, well, what will be interesting? Like, I'm not an SEO expert that's like seeing what's going to get clicks or anything, like I'm just thinking like, there's just so much. Like, I know I could probably get more clicks if we just go on like a whole BTC, Musk bash session here or pump up session, but at the end of the day, like I don't know if that's the most, if there's going to be any original takes on any of that, so, but my point being is that just being able to filter out, just what should require more of your time, or what should be taking.
Well, that's a challenge. Yeah. That is the challenge, right? Because we have fundamental views on particular companies, and we think we can have some range of value for that company for the next 5 years, right? Discounted back to today, and what we think the company is worth today. And that's only part of the issue right now. So, we have to have that. That's the foundation. But then the second part is, well, how charismatic is the CEO? How well are they telling the story? How is that story going to resonate with maybe less sophisticated investors? Should I buy potentially, if I think that story is going to resonate, should I buy out of the money call options for a little piece of the portfolio with the idea that this thing could skyrocket far beyond what it's actually worth? Then when do I sell when that happens? What's the opportunity? So I actually think I haven't really done this, but I think there's an opportunity to take 10% of your portfolio and put 0.5% in 20 companies of out of the money calls 6 months out or something like that, or a year out, that you think this story might resonate, and just let it go. And you can think about these recovery stories. And speaking of the one that Gary talked, there's hospitality companies, there's real estate, there's potential inflation plays. And you could come up with 20 companies that you think any one or more of them might catch the eye of a retail investor, might have a great story, and put 0.5% of your portfolio, not investment advice, in out of the money call options. And one or two of those hit, it could go up 100 times. And that's the environment we live in right now. It's crazy, but that's what it is.
Yeah. I gotta tell you, myself and a couple friends of ours, we've labeled it sort of with some of these companies getting chosen, like and we send around the meme from Toy Story where the claw comes down and pulls one of the aliens out, and it just says, "I've been chosen," and it just rises. You know, like that's the meme that we use to describe what's going on with some of these stocks. And it's weird, you know, like I'm talking to a bunch of really smart people, and
Great
you know,
analogy.
is chosen one status part of the investment thesis? And it's just weird to think that, like, yeah, I guess it could be part of the thesis. Like, is this, you know, if this is something we own, it's low float, and you know, the some stock twits or the Reddit crowd has gotten a hold of it, and you know, all of a sudden it's you know, it's mooning, you know, or isn't that what they say, mooning? I don't know. And like, that's like, I don't know, like, it's weird, but like, you know, if you put that in, like, if you have a fundamental view on something and it comes with sort of this lottery ticket attached to it, like, all the better, right?
Yeah, and you know, some of these companies though actually were probably undervalued at the time before they started skyrocketing. And you know, you think of GameStop, and some smart investors owned it. You know, Michael Burry and others. You know, some larger value shops as well before it went up. And then when the Chewy, you know, founder got involved too, interesting thing. You know, like there's potential for a transformation here. The story was there. It was probably undervalued from a value perspective, you know, last November or something like that. And then, so, okay, you know, why not buy some leaps, small percentage portfolio at the time?
Yeah.
It skyrockets though. Then here's the problem I had then with Namtai. You know, had all these views, when do you sell? Okay, like, do you sell when it gets to 50 and it's overvalued at 50? And then it goes to 100 and 200 and 400, you know, so you leave a lot of money on the table here, especially the options, that it's just crazy. But also, when you're this guy, what's his name, who, you know, chicken finger dude, you know, who got brought before Congress, like, you're crazy if you don't sell at $300. You're insane. You're set for life. You know, and it's the same situation with this Dogecoin, however it's pronounced, guy that he took out a mortgage on his house. He took 100 grand in it, and now it's worth, you know, whatever. He said, all I want to do is to be able to provide for my family and things like that. Well, then it goes up to 65, 70 cents. You know, he's worth 10 million bucks, and he doesn't sell. Why not? You know, so this is where you get so screwed up mentally, and this is screwing up kind of a whole new generation of investors here, that you say, the reason I got in the market is because of this, the reason I bought this is because of this is your thesis, and then it comes true and you don't sell, and it's going to go all the way back down to zero, and you're going to lose everything, you know, all the way, whatever, you know. You had for GameStop to fundamentally be worth $400 again, fundamentally, it could never happen. It could be a decade from now. You know, everything has to be perfect with this transformation for it to occur, for it to even be worth what it trades at right now. Everything in execution turnaround has to be perfect. And
there's no law that says that stocks need to trade on fundamentals, right? I mean, like, that's the hard part about this is, you know, what are Bitcoin's fundamentals? What are gold's fundamentals? And what if you took the psychology of Bitcoin or gold and applied it to the S&P 500?
yeah,
You know what I mean? Like, and that, we could be seeing some version of that, you know, like, it's, you know, why just because they have earnings and cash flows, why wouldn't the same psychology that's behind, you know, something like gold or Bitcoin be applied to all of American business?
well,
right?
That's what's happening, right? But that ends at some point. That ends, and this is the problem, right? For these investors who haven't been through that, who haven't read, you know, Ben Graham, you know, this is the problem. Is at some point it does end, because we do have shocks to the system. And
I mean, I would say for individual stories it might end, but for the market writ large, maybe it doesn't. I mean, like, has it ended for gold?
no, I think
Like,
you're right. Individual story. Well, you know, look, people forget, crypto people, gold was banned. You were not allowed to own gold according to the federal government until the 1970s, from like 1920 on, right? So this can happen. This can happen.
You know, I actually talked to somebody recently who was worried. They were looking at like these gold ETFs, and they were worried that the first of all, in our firm, we have a small position in gold ETFs. So but when I went to BlackRock and I asked them for the audit report on if the gold was there, they told me the person I was dealing with said I was the only person that had ever asked for it. But recently I was talking to somebody who was worried that the audit report, like that they're going to confiscate the gold, they're going to do all this stuff. And I'm like, the US government doesn't care about that anymore. They cared about it at a time because there was a link to gold. Now there's no link to gold.
Right.
There's no link to Bitcoin either. I don't like if they haven't stopped it now, like why would they? And I just can't think of a good reason.
Well, the question is this. Two things that I think could burst this bubble, right? Or whether it's a bubble or not. But first of all, taxation, right? These things, all of these new IRS agents that are going to be hired by the new administration, what are they going to go after? They're going to go after crypto gains because that's where the money is, first of all. And number two,
well, did you see the Peter Thiel interview where he sort of intimated that Palantir was assisting the IRS in finding it?
Wouldn't that be?
No,
he's going to get back at Elon somehow.
Yeah, right.
No, absolutely, I believe that. But the second thing is this: when you're talking about institutional ownership from the corporate world, the 40 Act exists, right? And the 40 Act basically limits the type of investments that companies can make. No more than 40% of total assets can be in securities. Okay, securities are generally seen as like stocks and things like that. Now, certain cryptos are considered in some areas security, and in other jurisdictions, not jurisdictions, but other regulatory authorities, it's not a security, and others it is. And all SEC has to do, this doesn't require congressional approval. All they have to do is say our guidance is that crypto are securities. Now, corporations cannot own it. I mean, they can own it only up to a certain degree, though, only up to 40% of their total assets, and which is going to turn away most corporations from being able to own it. They could put that out any day. That would be crushing to Bitcoin.
Yeah, it's sort of weird. It's like the Wild West in terms of like what it is. Like people don't. It doesn't have. It's sort of like a platypus, right? It kind of have properties of being a security. It has properties of being a currency. It has properties of being a commodity. It's like I don't know.
But
when I've observed the actual trading, what's that?
The SEC can just put out a position paper and decide that.
Yeah, I guess my question on that stuff is like, why haven't they yet?
Well, good question.
Yeah.
No, not going to get an answer here.
No, I'm just.
No. I mean, we talked about Bitcoin. I knew it was inevitable. We're definitely.
Bobby, we talked about
crypto as a whole, not just Bitcoin.
This is true. This is true. Yeah, I didn't say no crypto. I said, all right, let's try to. But I mean, the volatility that we've seen. I mean, in the last.
Well, we could talk about SPACs too. We're almost done here, I know, but you know, when you think about it, it's been a few weeks since we've gotten together and had these discussions, and so what's happened, right, in the last month or so, and the SPAC market has been decimated. There's opportunities there also. There's arbitrage opportunities there. Some of these story stocks have continued to rise. We've had crypto, we've got Elon, we've got other things like that. Inflation has occurred. So when we get back to the weekly schedule here, maybe we can dedicate an entire show on inflation and whether it's transitory or not. But these are the things that are the headlines.
Yeah, no, we'll definitely do. I think we should definitely do another episode on inflation because we did one, we did one for Gary for the
lumber bros on the guys that own their sawmills and they're patting each other on the back so hard all the time on Twitter. It's.
I know we got to get a lumber bros episode going. I mean, that is just hilarious. It's a thing. Look, it's a big thing on Twitter right now. I mean, there are
certain levels of insufferability for types of investors back in the day, like these gold bugs, and I'm playing around here, so no actual disrespect to these people, but gold bugs used to be so insufferable, and then it turned into crypto bros, so insufferable, and even the real estate guys in the 05, 06, 07, those who kind of newly got into real estate. And today there's so many sectors of insufferability in the market. Look, value investors are insufferable in many ways. These really dedicated Ben Graham style people. And so we could go show to show about highlighting insufferable people, which include the inflation people and others. And we have that, of course, ourselves too.
Steven, I personally, and I know you love it too, but I love it. I love characters. I love fanaticism. I find it absolutely fascinating.
Yeah,
people taking like that heavy dedication to just one thing. But you're right. We are kind of rounding the bend here. So let's get your final take before we head out. So Steven, you want to do your quick final take and where people can go and find?
Yeah, you can find us at Arquitos.com, ARQUITOS. My final take would be find the story. Find the story. Get out of the companies that the management cannot tell the story. And I'm a victim here because I have a couple holdings like this. And look for companies that are both reasonably valued and also that can effectively tell their story. That's the market we're in right now.
There we go. All right, Gary.
Yeah, I mean, I have a podcast on your network with my partner Eric in the Market Trenches, so you can listen to that when we have those. And if anybody's listening that would like to come on, that would be good to get some guests. I guess my final thought on that is it's harder today, but it's sort of like coming through a fire hose, and so I've been just trying to spend my time trying to better organize myself and the flow of information and the flow of stuff. And there's always something to do. So I think these things, the various bros that are out there and the things that people are focused on, crypto, NFTs. So we didn't even talk about NFTs. What's up with that?
I know. What is up with that? I dropped the ball again. I mean,
I'm actually involved in a SPAC right now that's doing an NFT play, so we didn't even touch on that. That's like meme investing nirvana. I mean, but it's
what's up with that?
You forget to bring this up, Gary. No, just kidding. I was just messing.
I mean,
we'll save that one. We'll save that one. That'll be a good one.
I've got clandestine meetings at golf courses. I've got, I got some stories that I probably can't tell, but there's always something to do. So
that's a great way to end it. All right, Gary, Steven, as always, it's been way too long. Love catching up today. We're going to be doing we're going back to our weekly programming again now. So this is the first week. So everybody, if you're enjoying the Investors Roundtable, you can watch each video version on the SNN Network YouTube channel, and then you can listen to the audio version on the Planet MicroCap podcast stream. So again, I'm your host, Robert Kraft, and thank you all for tuning in. So guys, till next time.
Love you guys.